Welcome back. Well, IPO season is back, or rather is continuing with more than 2 dozen companies chasing around 30,000 crores, which is expected to go public over the next few months itself. To discuss this and more, we have Pranav Haldia, who's the MD of Prime Database, joining in. Pranav, hi. Thank you very much for taking the time out. Well, now that we have the elections out of the way, we have a verdict which the markets are quite happy and sanguine with, and there is stability in terms of the markets. What is your sense when it comes to the IPO pipeline for the remaining part of the fiscal? It was up around 19% in terms of IPO fundraising in FY24. If you had to put some numbers, what are you expecting in FY25?
Well, so first of all, thank you for having me. This time elections were actually a non-event for the primary market. If you look at historical data of the four previous, election cycles of 2004, 2009, 2014, and 2019, you had a total of 28 IPOs raising about 7,500 crores cumulatively across those four election cycles. In this year, in the 6 months leading up to the elections and the 2 months of the elections, you had 52 IPOs raising 50,000 crores. Like you said, IPO season is continuing. It's not back. In fact, April and May of election years has typically been an extremely dry period. But again, this year you saw 7 IPOs being launched, raising close to 15,000 crores. So this year, this election season has been a bit of an anomaly. Of course, there's been a bit of volatility in the recent past. And as we've seen that primary markets generally do not like any kind of volatility. But I think, the kind of run-up that you've seen recently bodes extremely well for the pipeline. As we said right now, there are 18 companies which already have SEBI approval, which are looking to raise close to 20,000 crores. Of course, Ola Electric, we all read about a couple of days back. Allied Blenders is another one. At the same time, you have about 37 companies looking to raise 50,000 crores, which are filed with SEBI and are awaiting approval. Some of the larger ones, of course, Afcons Infra, Bajaj Housing Finance, Vari Energies. So I think the pipeline looks extremely strong as long as secondary market continues to be buoyant the way it is. And at least at this point in time, it doesn't. There seems to be no reason why it shouldn't, especially with the kind of flows that you're seeing from domestic investors, institutional and retail. I think you should have a stellar year for IPOs in 24-25.
Take that point. The SIPs every month have become 20,000 per month for 2 months in a row. So if that trend continues, there's 240,000 crore rupees waiting to get into the markets. Obviously, not all can go into secondary markets. Some part of that has to find its way through primary offerings as well. I just wanted your thoughts on how much higher can this year be in terms of raising of funds as compared to last year, because that was a record year, over 60,000 crores raised.
Well, of course, you had previous years as well. 17, 18 was another stellar year which had gone back. It's very hard to put a number really, but I think we should safely be able to cross last year's figures. One important aspect is also that unlike last year, wherein you had a lot of IPOs, but relatively smaller deals, the average issue size was only about 800 crores last year. I think what already you've seen in the last couple of months and, some of the issues which are in the pipeline as well, you will see some larger deals hitting the market as well. Of course, we haven't spoken about it, but the mega issue of Hyundai is eagerly anticipated, which, is expected to be the largest IPO, even beyond what LIC had raised. Okay. So, I think we should comfortably be able to cross previous highs as far as IPO fundraising is concerned.
Okay. If you could just dissect it sector-wise for us, Pranav, because last year there was not that much participation from the BFSI space. Are there more IPOs lined up from that space, as well as these new age companies where the presence was quite limited?
Well, of course, as far as new age is concerned, you have Swiggy, which could potentially be listing for this year. As you rightly said, last year, you did not see BFSI segment in a major way. In previous years, you've seen 60 to 70% of the total funds being raised actually from the BFSI sector, which actually is not a huge negative as far as I'm concerned. You saw issues from a whole wide variety of sectors. Manufacturing sector also came in a big way. And I think that bodes extremely well, for the overall capital market ecosystem. When you're seeing a large number of companies across sectors, across sizes, having the confidence to tap the primary market.
Right. I just wanted your understanding of the trends over the last few. Hang in there. Actually, as we speak, we have to our conversation on IPOs. I just wanted your understanding on the funds, the sellers side. I mean, earlier you would have a lot of the money that was raised by companies in terms of a fresh issue. Then you had a lot of promoters offering their shares as OFS. Now you have a lot of the private equity investors, offering their shares to the public market. So how has that trend changed? The quantum raised via fresh issue versus the quantum which is secondary sale?
Well, so again, last year, which is 23-24, was a bit of an anomaly, wherein you saw 47% of the total amount being raised, was actually fresh capital. In comparison to previous years, where this used to be about 15 to 20%. So last 5-6 years, you've seen the OFS component being 80-85% of the total amount actually being raised. So last year was a bit of an anomaly. At the same time, this entire debate of stay away from issue, if there are private equity investors selling out, I don't buy into that argument. I think it's a sign of a maturing capital market ecosystem. We have to realize that these investors are the ones who are identifying these companies at the early stage, putting in the risk capital at that point in time. And of course, they need to provide an exit to their investors as well. If we go back to the 90s or even early 2000s, a lot of these companies were actually coming to the primary market for this risk capital. And which is why you saw so many companies, either completely shutting shop. You also had a few vanishing companies. But what you're now finding is that companies which are hitting the market are far more evolved, far more mature in their life cycle. They've had multiple rounds of fundraising, multiple rounds of due diligence, and I think that gives a lot of comfort, especially to retail investors, for some of these issues.
Okay, all right, Pranav. We're going to leave it on that note. Thanks very much for joining in and giving us all of your insights in terms of what we can expect in the overall fundraising and primary market action going into the rest of the fiscal. Well, we need to take a short break, but on the other side, we'll get you more on the markets. A lot of stocks lined up in terms of trade today. More on that in just a bit.